Good morning to all of you. Welcome to our new session of the e-learning class. I am Rasmi Ranjan Mishra, lecturer of UN Autonomous College of Science and Technology. Today, I am going to discuss on a subject regarding basic financial accounting. So, on today's discussion, I am going to discuss relating to final account with adjustment. So, generally, every business organization, they are having the main objectives of running a business is to earn profit. Profit earning that is necessary not only for the survival of the business but also for its expansion and diversification. So for that, every owner of the organization, they wants to know the periodical success of the business. So for which they wants to review the books of accounts and transactions those affect to the business that are recorded first in journal, then several accounts are prepared or ledger accounts are prepared where transactions are posted from journal to ledger. After preparation of a ledger account and balancing of ledger account, the trial balance is prepared, which is prepared only to check the arithmetical accuracy of the books of accounts. That means whether the total of debit balance equal to credit balance or not, that must have been find out by preparing trial balance. So after preparation of a trial balance, different balances of all the accounts taken into consideration to prepare the final account, and the final account is prepared only to know the profitability position as well as the financial position of the business at the end of a particular period. Generally, the profitability position can be known by preparing trading account and profit and loss account, and the financial position that can be known by preparing a balance sheet. So at the time of preparing the income statement as well as position statement, the businessman must have to take into consideration several transactions that are relating to income and expenses, those affect to the business, that must have been considered and that must have been recorded. So at the time of preparing trading account, the businessman must be considered to take into consideration all the items which are related to direct items, that may be direct income or may be direct expenses, and that direct income and expenses should be considered or should be taken into consideration at the time of preparing trading account to find out the gross profit or gross loss of the business. If income is more than expenses, that is a case of gross profit, and if expenses is more than the income, that is a case of gross loss. But at the time of preparing profit and loss account, the indirect nature of item, that is indirect income and expenses, should be considered, and that income and expenses should be taken into consideration to find out the net result of the business. If total of income is more than the total of expenses, that is a case of a net profit, and if the total of expenses is more than the total of income, that is a case of a net loss. This is coming under the income statement. Second one is the position statement, which is prepared only to know the financial position of the business, and that can be known by preparing a balance sheet. Balance sheet is a statement of assets, liabilities and a capital, and at the end of the period when balance sheet is prepared, the businessman must focus on that the total of assets must equal to total liabilities plus capital. So how that income and expenses should be taken into consideration at the time of preparing final account, that we will discuss everything one by one. Generally, when trial balance completed, from the trial balance the final account is prepared, and the trial balance, that is a statement of balances of all the accounts. That means several accounts, when it is balanced, that is transferred to trial balance, and by considering that trial balance, the final account is prepared. That means the items mentioned in the trial balance, that is already adjusted. But there are several items, those are affect to the business, but that is not recorded during that particular period. For example, salary outstanding, that is one head of expenses which is made during that particular period, but that is not recorded. So that need to be adjusted to find out the true profit or true loss. Another case, several items relating to income or expenses which is not during that particular period that relate to future period, but that is recorded. That means prepaid insurance premium. That is one head of expenses which is paid in advance, as that is not related to that period. So in that case, at the time of find out the true profit or loss, that needs to be adjustment. So adjustment means several head of income or expenses, whether related to current period or related to the next period or future period. If that affect to the business, in that case that needs to be adjusted to find out the true profit or loss of the business as well as the financial position of the business. So there are several items of adjustment nature items are there. We have to discuss one by one everything. So the first adjustment item, that is known as closing stock. So first we have to know what is closing stock, then how the closing stock is adjusted if it is not mentioned in the trial balance. So when the items that is not mentioned in the trial balance, at the end of the trial balance or after the trial balance, the items are there, that needs to be adjusted. And adjusted means that must have been adjusted twice, whether maybe trading account, profit and loss account, maybe profit and loss account balance sheet, or trading account as well as balance sheet. But the items given in the trial balance, that is already adjusted, and we have to make its treatment only once. So what is closing stock and how it is adjusted if it is not mentioned in the trial balance? Generally, closing stock implies that the stock lying at the end of the period. That means the unsold stocks, those are at the end of the period, that is called as a closing stock. If closing stock is given inside the trial balance, in that case that needs to be treatment only once, that is one head of assets, and that must have been shown at the time of preparing balance sheet as a closing stock as an assets. If closing stock is given outside the trial balance, in that case that needs to be adjusted. So the first adjustment treatment, that is it must have been shown at the on the credit side of trading account. The second treatment, it must be shown on the asset side of the balance sheet. So these two treatments must have been made if closing stock is given outside the trial balance. First, it has been shown on the credit side of a trading account at the time of finding out the gross result of the business, and a second treatment, it must have been shown asset side of the balance sheet as closing stock as an asset. So this is one item relating to closing stock that has been adjusted if it is not given inside the trial balance or it is given outside the trial balance. The second item, that is prepaid expenses. So first we have to know what is prepaid expenses. That means expenses which is paid in advance. That means which is not relating to the current period, but that is relating to the future period, and we paid it in advance. So when that type of expenses it is made in the business during the particular period, and for that period the businessman wants to know the true profit or loss of the business, in that case that must have been adjusted, as the prepaid expenses stands for expenses paid in advance that is not related to the current period. So at the time of preparing trading account or profit loss account, that needs to be adjusted or that needs to be deducted. If that head of expenses relating to direct item or direct expenses, then the prepaid expenses must have to be deducted at a trading account from the particular expenses. If it is indirect expenses, so prepaid expenses must have to be deducted at the time of preparing profit and loss account. And as it is paid in advance, so expenses paid in advance, that stands for one asset, and that must have been shown on the asset side of the balance sheet as prepaid expenses. So the several treatment or adjustment is, first it will be shown on the trading account, debit side of trading account, by deducting from the particular direct expenses. Or if it is a case of indirect expenses, if it is a case of indirect expenses, it must have been deducted from particular expenses on the debit side of profit and loss account. So at the time of preparing trading account or profit and loss account, the accountant must have been considered that whether it is a direct expenses or indirect expenses. If it is direct expenses, then direct treatment on trading account by deducting from the particular expenses. If it is indirect expenses, then it should be considered at the time of preparing profit loss account, and that item of expenses must have been deducted. The next treatment as expenses paid in advance, so it is one type of asset, so it will be shown on the asset side of the balance sheet. So this is the second item of adjustment that is treated at the time of preparing final account. So the next adjustment item, that is outstanding expenses. So how that expenses will be adjusted at the time of preparing final account. So first we have to know what is outstanding expenses. That means expenses, whether that is direct or indirect nature item, if it is incurred but not paid, that is called as a outstanding expenses. Expenses incurred for the particular period but that is not paid, that is called as a outstanding expenses. For example, salary outstanding, that means expenses or the salary of the employees already made during that period but the organization is not paid the salary to the employees. So that's why it is called as a salary outstanding. So being one type of expenses which is outstanding, that is one type of a liability for the business, because business is going to pay that amount of expenses for that particular head. So when it is one type of outstanding nature or liability, how we will treat that item at the time of preparing final account. So the first treatment, as it is outstanding and that is relating to that particular period, it will be shown on the debit side of trading account if it is direct nature, by adding to the particular expenses. Second treatment, it will also be shown on the debit side of a profit and loss account if it is indirect nature, by adding to the particular expenses. So whether that is direct or indirect, as it is outstanding, we must have to add that amount of outstanding expenses to the particular head of expenses. So being outstanding as an liability, so we must have to be shown on the liability side of the balance sheet. So another treatment, it will be shown on the liability side of the balance sheet. So outstanding expenses, that is complete. Then we are going to discuss relating to other head. We have completed expenses, whether that is prepaid or that is outstanding. Now we are going to discuss on income. The first one is accrued income. So we must have to clear about that. What do you mean by accrued income? Accrued income means income incurred or income made but that is not received. So that means income already made during that period but business is not received till now. So that is called as a accrued income. So being an income and it is made but not received, it is one type of asset for the business. So as it is income but that is not received in cash, we must have to be add it on the particular head of income, whether that is direct or indirect. The second treatment, as it is incurred but that is not received, so we must have to shown it as an asset on the asset side of the balance sheet. So accrued income means income earned but not received. The treatment is the first treatment, that is it will be shown on the debit side of trading account if it is direct income and by adding to the particular income. Sorry, there is one mistake. As it is income, we must have to shown it on the credit side of the final account, that is relating to trading account or profit and loss account. So being an income that is earned but not received, we must have to be shown it on the credit side of a trading account if it is direct nature by adding to the particular income. If it is indirect nature, it will also be shown on the credit side of a profit and loss account. Credit side of profit and loss account if it is indirect by adding to the particular income. The another treatment, being an asset, we must have to shown it on the asset side of the balance sheet. It will be shown on the asset side of the balance sheet. So the next that is income received in advance. So what do you mean by income received in advance? That means income that is not relating to the current period but we received in advance. That means that is relating to the future period. So as we received in advance, that means the business is going to pay that amount of income or that will be adjusted for the next period, and being it is received in advance, it is one type of a liability for the business. So as it is not relating to that particular period and being an income, we must have to be deducted on the credit side of the trading account or profit and loss account based upon the nature of income, and as it is one type of a liability, so we must have to shown it on the liability side of the balance sheet. So the first treatment, that is it will be shown on the credit side of trading account if it is direct by deducting from the particular income. Second, if it is indirect, it will be adjusted on the credit side of profit and loss account by deducting from the particular income. And the another treatment, being a liability, it will be shown on the liability side of the balance sheet. It will be shown on the liability side of the balance sheet. So this is our today discussion relating to adjustment of a few items, that is closing stock, prepaid expenses, outstanding expenses, accrued income, income received in advance. What is that items and how that will be adjusted at the time of preparing final account. In our next class, we will discuss the other head of adjustment items and their treatment in a final account. Thank you. Have a good day to all of you.